This presentation is on education benefits, found in Lesson 16 of the Self-Study Guide. References for this are Publication 4010, that's the NTTC Modified Publication 4012, Tab J, Publication 4491, Lesson 22, and IRS Publication 970. These are the topics we'll be covering in this presentation. We'll discuss education credits and the tax benefits, who and what expenses are eligible. We'll talk about two credits, the American Opportunity Credit and the Lifetime Learning Credit. And we'll just briefly mention tax layer input. On the intake and interview sheet, make sure that the appropriate box is checked to indicate that the taxpayer had education expenses. Now, during the interview, ask taxpayers if they are aware of the education credits and give a brief description of each. Next, gather information to determine if any credits can be claimed. There are two main education credits. The first is the American Opportunity Credit, which is designed to cover the first 4 years of college or vocational school. And then there's the Lifetime Learning Credit. It's designed to cover learning over a lifetime. Now, claim only one education credit per student per year, either the AOC or the Lifetime Learning Credit. For the American Opportunity Credit, the student must be in a post-secondary degree program. Think of a typical college student. Now, if the student doesn't qualify for the American Opportunity Credit, which has stricter rules, they may qualify for Lifetime Learning Credit. That student could be enrolled in a degree program, or the course could be for job-related reasons. It's a good time to open your NTTC Publication 4012 to Tab J. There's a terrific chart towards the beginning of the tab that lists all the education benefits and the requirements for qualification. Students will normally be provided with a Form 1098-T that's issued by the education institution. It'll show the amount paid, student status, and any scholarship or grant amounts. And they must have a 1098-T to claim AOC or Lifetime Learning Credit unless the school is not required to issue one. Now, one instance is when all costs have been paid by scholarships or grants, the school is not required to issue a 1098-T. In this case, the taxpayer will need to provide all of the required information. Now, you have to verify that with the taxpayer. The best source would be a student's account statement from the school, which is usually available online. If an adjustment is needed, box 4 or 6, then the return is out of scope. And here is a copy of a Form 1098-T. Notice in box 1 is the total paid. Box 5 is grants and scholarships. Boxes 4 and 6 would be out of scope. Box 9 and 10 show half-time student and a graduate student. 9 would tell you, if it were checked, that it could qualify for the AOC, the student could. It used to have to be a half-time student. If it's not checked, that means they don't qualify for the AOC. You'd be looking for the Lifetime Learning Credit for that taxpayer or student. All right, let's look at who's eligible and what expenses are eligible. For both the American Opportunity Credit and the Lifetime Learning Credit, the student must be a taxpayer, spouse, or dependent. The student who could be claimed as a dependent but is not claimed as a dependent can claim the credit. Dependent students aren't eligible for the education credits. The person or taxpayer who claims the dependent can claim the credit. A student must be enrolled in an eligible post-secondary school. Taxpayers and student claiming the American Opportunity Credit must have a valid Social Security number or identification number by the due date of the return. The taxpayer can't file married filing separately. And note, for taxpayers with a dependent, always enter any available education credit on the taxpayer's return and enter any taxable scholarship or grant income on the dependent's return. There are rules for both of these credits. A taxpayer cannot treat the spouse as a non-resident alien. The taxpayer's adjusted gross income must be below phase-out limit for their filing status. We'll see that in just a minute. Form 1098-T, generally required to claim either the AOC or the lifetime learning credit, that is, unless the school is not required to issue the form. Now, in that case, the taxpayer should provide the filer's employer identification number and expense information. Now, qualified education institutions. Is any accredited public, nonprofit, or private post-secondary institution that's eligible to participate in Department of Education student aid program. It's a college or university, a technical trade, or vocational school. As an exception, for a tax-free scholarship must be accredited, but not necessarily eligible for student aid program. Now, to search for accreditation of an individual institution, you can check the site on the slide. What are qualifying education expenses? Well, tuition and fees, but they must be paid to the school as a condition of enrollment. Student activity fees, also paid to the institution as a condition of enrollment or attendance. And expenses may include books, supplies, and equipment. Expenses that don't qualify are room and board, any insurance, medical expenses including student health fees, transportation, parking, sports, games, hobbies, or non-credit courses. For qualified expenses for both credits, expenses paid by the student are considered paid by the taxpayer. Expenses paid by third party are treated as paid by student. As the third party may be a relative, such as a grandparent. In this case, if the grandparent pays the education expenses, it's deemed paid by the student, and the parent taxpayers can claim the credit. Okay, now we're going to take a look at the individual credits, the American Opportunity Credit and the Lifetime Learning Credit. Let's talk about the American Opportunity Credit first. This credit can be used for up to 4 years for each student and has a maximum credit of $2,500. Now, $4,000 is the magic number for qualified education expenses. Why? Well, once the student reaches $4,000 of qualified education expenses, they can receive the maximum credit of $2,500. Credit is 100% of the first $2,000 of expenses, and then 25% of the next $2,000 of expenses. Now, don't worry about the calculation. The software performs the calculation for you. Just know that you don't have to find more expenses after $4,000. Now, the American Opportunity Credit has a non-refundable and a refundable portion. The refundable portion can be up to 40% or $1,000 of the credit. You may remember from the Introduction to Federal Income Tax Law video that refundable credits are very valuable because the taxpayer can get a refund even if they don't have a tax liability, or if they had a tax liability but it was wiped out by other credits. The refundable portion of the American Opportunity Credit is not available to taxpayers who are under 18 at the end of the tax year, or they are 18 and their earned income is less than half of their own support, or they're full-time students over 18 and under 24 with earned income less than half of their own support, and one parent alive at the end of the year, and not married filing jointly. Now, it's not required that the earned income be used for the student's support, just that the student earns that amount or more. A reminder right up front that no married filing separately status is allowed for education credits. So for the American Opportunity Credit, the requirements are the student must not have completed 4 years of academic credits, that's as determined by the school, by the beginning of the tax year. It's limited to 4 tax years. The student must be a candidate for a degree, a credential, or a certificate. Income phases out starting at $80,000 and $160,000 for married filing jointly. Now, the student must be enrolled at least half-time for at least one term during the tax year set by the institution. The student must have no felony drug convictions. Now, do you need to memorize these items? Very quickly, the answer to the question is no. All of this information is available in the NTTC Modified Publication 4012 in Tab J. You notice here I've highlighted the American Opportunity Credit, just to show you an example of what's in the 4012. You can see in the column that says what education qualifies. It says undergraduate, graduate. Graduate can claim the American Opportunity Credit if and only if the student hasn't completed the first 4 years before beginning of the tax year. Under what other conditions apply? You can see where it says can be claimed for only 4 years. I won't read the rest of these. Just go to the document. You can see the and find the information. And it shows to the right what income range do benefits phase out. They phase out between $80,000 to $90,000 for all filing statuses other than married filing jointly. And married filing jointly is between $160,000 to $180,000. Again, married filing separately is out of scope. It's not allowed, is what I should say, not out of scope. Right. Qualified expenses for the American Opportunity Credit. Course-related books, supplies, and equipment. They can be purchased from any source. Now, computers are an expense when they're needed to receive assignments, post assignments, collaborate with other students on group assignments, or to receive grades. And the taxpayer should keep receipts and documentation of computer or internet requirements. Now we're going to focus on the lifetime learning credit. That's where the education is needed for the purpose of getting a job or improving job skills, or could be for a degree program. So a student who's in college for more than 4 years, or going back for a second degree, or taking accounting classes to enhance their resume would take the lifetime learning credit. It's a maximum of $2,000 credit that represents as 20% of the first $10,000 for qualified education expenses. It's a non-refundable credit. A felony drug conviction, unlike the American Opportunity Credit, felony drug conviction is not a disqualifier for this. And as it's in the name, it's lifetime. It can be taken every year for a person's life. As I just said, there's no limit to the number of years available. There's no minimum amount of course workload, unlike the American Opportunity Credit, where they must be enrolled for at least half a year. There's no degree requirement. If it's not to a degree, it must be to acquire or improve job skills. And the phase-out begins with modified adjusted gross income greater than $80,000. Again, that's $160,000 for married filing jointly. So qualified expenses for the lifetime learning credit are tuition and fees, books and equipment if they must be purchased from the school as a condition of enrollment. That's very common with trade, apprentice, and other vocational schools. And computers are included, and only when they're a condition of enrollment. So let's look very quickly at what's the same with the two education credits. So for whom can you, if you were the taxpayer, claim the benefits? It applies to, again, both the AOC and the LLC. You, your spouse, any student you can claim as a dependent on your return. You can't claim benefit if someone else can claim you as a dependent. Now, who must pay the qualified expenses? You or your spouse, the student, or a third party, like a grandparent. There's a limit on the modified adjusted gross income for married filing jointly. It's $160,000. For single, head of household, qualified widow, it's really qualified surviving spouse now, $80,000. And if married, can you file a separate return? The answer is no. There are differences between the two. Maximum benefit for the American Opportunity Credit, it's up to $2,500 per eligible student. The LLC, it's up to $2,000 credit per return. Now, refundable and non-refundable, 40% of the AOC is a refundable credit. That's up to $1,000 of it is refundable. The LLC, it's not refundable at all. Now, the number of years of post-secondary education is AOC is only if the student hasn't completed 4 years of post-secondary education before 2024, in this case. LLC, all years of post-secondary education, and for courses to acquire or improve job skills. More differences. Number of tax years of benefits available. Again, 4 years for the AOC. It's unlimited for the lifetime learning credit. Type of program must be pursuing a degree or other recognized education credential. And for the LLC, the student doesn't need to be pursuing a degree or other recognized education credential. Number of courses must be at least enrolled half-time. And for the AOC, LLC, available for one or more courses. And felony drug conviction. You can't have a drug conviction with the AOC. Even if you have a felony drug conviction, it doesn't apply for qualifying for the LLC. Now, tax layer input. There is a separate video for Lesson 16, Exercise 32 demonstration. View that demonstration to see how to enter data for education credits. We're looking at an example here for Shannon Adams. And this information you'd uncovered during the interview. She's going to community college. She has a small scholarship. She purchased books for school. Last bullet is kind of an odd comment, but for the American Opportunity Credit, the student must not have any felony drug convictions. Here's the 1098T tuition statement from the school for Shannon. Sometimes you have parents sitting in front of you and they don't have the form. That's because it's the student's tax form and it has the student's social security number on it. Now, if no one claims Shannon as a dependent, Shannon could file a tax return and claim the education credit for herself. In this case, her parents are claiming her in their tax return, so only her parents are eligible to claim the education credit. Now, you need to ask the parent to contact their child to get the tax form and find out any qualified education expenses the student had. If they can't reach the student when they're sitting in front of you, then they may need to come back. Now, box 1 is payments for tuition and required fees. In box 5, you can see that Shannon received a scholarship of $1,000. Now, employer identification number, that needs to be entered in tax layer. Note that it must be a qualified education institution. There's a website to look up education institutions if you're not sure. Box 8 is checked. Now, for the American Opportunity Credit, a student must be enrolled at least half-time in a degree program. Now, it doesn't have to be a college, it could be a trade school, but if this box isn't checked, then they can't take the AOC. They'd have to use the lifetime learning credit. Even if box 9 is checked, they won't qualify for the AOC if they've completed their undergraduate degree before the start of the tax year. Many tax forms are what we call type what you see, but this one isn't. Now, tax layer screens don't follow the form. For example, not all the education expenses are listed on the form. In the interview, you may have received information about required books and supplies the student had to purchase. Now, expenses don't have to be just books. If someone's taken a lab class, then a lab coat and protective glasses that are required for the class will be eligible expenses. As you can see, the net education expenses for Shannon are $3,585. That's taking the $4,200 what was paid, received by the school, minus the $1,000 scholarship that she received, but adding in the $385 in required books she had. So the net total is $3,585. Just expenses to show what's allowed, not allowed. A couple of examples. So the books of $385 were allowed. If Shannon had a parking fee of $250, that would not have been allowed. Room and board's not allowed at all. The tuition was allowed. So again, the total qualified expenses were $4,585, but subtracting the $1,000 scholarship leaves $3,585. And once we've input information for the education credits, a Form 8863 will be generated. You can see here that it's for both the American Opportunity and the Lifetime Learning Credit. Part 1 shows a refundable portion of the American Opportunity Credit. In this case, it shows up as $1,000. In Part 2, any non-refundable education credits would show up. In this case, it's a non-refundable education credit of $1,000 as well. Now, the refundable credit shows up here on line 8 and Form 8863, line 8. It is then carried over to Form 1040, line 29. The non-refundable credit, here in Form 8863, line 19, will go to Schedule 3, line 3, and then from there to Form 1040, line 20. And that concludes this presentation. I do want to mention once again that there will be a demonstration tax layer input for education benefits, and that will be video titled Lesson 16, Exercise 32.